Have you ever sat in front of a chart looking for an entry point, but everything seems too busy and confusing? Or maybe you're just confused by the sheer number of indicators. Today I'm going to teach you a scalping strategy that works with just two simple moving averages, the 9 EMA and the 15 EMA, but the important thing is how to use it. If you know where to enter, how to spot a reversal, and how to get the right confirmations, you can find a good position in just a minute. This strategy is not only for beginners, but also used by professional traders because it's fast, low risk, and reliable. Scalping is one of the fastest and most intense trading styles in the world. In this method, traders stay in a position for only a few minutes or even seconds, rather than staying in one position for hours or days. Their goal? To capture very small fluctuations, but often throughout the day. Now you might ask, if the profit per trade is so small, why is scalping so popular? The reason is obvious, because the number of trades is large and, when done correctly, it can give a good cumulative profit. This method is especially useful in markets like Forex or crypto that have a lot of fluctuations. But scalping requires precision, high concentration, and high reaction speed. This style is suitable for those who like to make quick decisions and get results quickly. If you are one of those who do not have the patience to wait for several hours, scalping is for you. First of all, log into the TradingView platform. Of course, if you use MetaTrader or any other software, it is not a problem. It is only important that you can add EMAs and change the timeframes easily. Chart preparation steps. 1. Set the time frame to 1 minute. Since we are scalping, the time frame should be short. A 1-minute chart is the best option for our strategy today. 2. Add the EMA indicator twice to the chart. In the search box, type EMA or exponential moving average. Once added, set one of them to 9 and color it, for example, blue or green. Set the second one to 15 and color it red or orange. These colors will help you visually differentiate. 3. Keep your chart background clean. Clear other indicators. The reason is obvious. Your mind should not be distracted by too many signals. The more clean, the better your decision making. If you work with TradingView, be sure to use the Templates section to save these settings. This way, every time you open the platform, your chart will be ready and straightforward. You can also set an alert for EMA crossings or price touching EMA 9 to get notified quickly. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. One of the biggest mistakes novice traders make is to enter a trade without paying attention to the trend and unintentionally swim against the current. First, a golden rule. When EMA 9 is above EMA 15, the market is bullish. Only look for long positions. When EMA 9 is below EMA 15, the market is bearish. Only look for short positions. With this simple rule, you will filter out more than 50% of common mistakes. Why is EMA effective? EMA is an exponential moving average and gives more weight to recent prices than the simple moving average, SMA. This means that it reacts faster to price changes and is much better for scalping. EMA 9 is a very short-term average. Its reaction speed is high. EMA 15 is a bit slower and acts as a filter. When the EMA 9 is moving above the EMA 15, it means that the newer prices are growing, and this is a bullish signal. We use the EMAs as a trend confirmation tool, not to get a pure entry signal. That is, we only look for entries when the EMAs are in line. Avoid entering when the EMAs are intertwined or have no clear gap. This is called the chop zone, where the market has not made a decision. In scalping, speed is important, but unplanned entry equals loss. Our strategy says, you should not enter just because the EMA 9 is above the EMA 15. You should wait for the price to react in a certain way, and that reaction is a return to the EMA 9. Step-by-step entry. 1. Wait for the price to make a pullback after an up or down move. 2. This pullback should bring the price close to EMA 9, not necessarily a full bounce. 3. When a candle closes at or near EMA 9, focus your attention. 4. If the next candle moves in the direction of the trend and closes, enter at that time. For example, in an uptrend, EMA 9 above EMA 15. Price makes a pullback towards EMA 9. A candle closes near or above EMA 9. The next bullish candle closes. This is where the entry is made. Why is EMA 9 our entry point? Because EMA 9 represents the speed of price retracement. Most momentary pullbacks come right up to EMA 9 and then continue the trend again. With this entry, we are riding the next wave exactly, with the least possible risk. In the smart money style, we pay attention to these key concepts. 1. Break of structure, BOS. When a previous top or bottom is broken, it is a sign of a change in market structure. Second order block, OB. The last big candle before a strong move that shows that banks have entered there. Third fair value gap, FVG. An area that has been created by a rapid price movement, causing a gap. Now, how do we bring these concepts into our strategy? For example, suppose on the 1-minute chart, the EMAs show that the trend is up and the price has returned to the EMA 9. Before you enter a position, take a look at the 5-minute chart. Do we have an upward structure on a higher time frame? Has a BOS formed and the price is returning to an order block? Or is the price even pulling back inside an FVG? If the answer to these is yes, your entry will be more powerful. If you like this strategy, be sure to support me with a like. Write in the comments what strategy or concept you would like the next tutorial to be about. Don't forget to subscribe, because the next videos are just as practical and useful.